Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, January 10th, and we are coming at you on the second day of the trading week. We have CPI coming up on Thursday, which is the big important economic milestone for the markets, and that is pretty much what we're looking for the next big signal. But what's going to happen between now and Thursday morning? Let's go ahead and dive in. So right now we've got my alternate Bitcoin chart up. We've got 5 minutes on the left, we've got 1 minute on the right, and we just had a bit of a short-term pump back up to recent highs near 17.4K. We're going to discuss the resistance of 17.4K, something that I discussed yesterday on CoinDesk TV. Mentioned 17.4 would likely be resistance, and we'd probably catch around 17K. We actually caught around 17.1K, but we headed higher back to recent highs, and 17.4K is really the make or break level for resistance. If you can move above 17.4K and confirm it as support, you've got a lot of room up to about 18 to 18.5. And if you get rejected at 17.4K, you're probably headed at least in a range between 17.1 and 17.4K, potentially lower. So right now, looking at the 1 minute, we are just under 17.4K and getting a lot of volume coming in. When we started the video, a lot of green on the board. We also have a lot of green on the spot buying side, which is good. But let's see how perps end up reacting. We'll come back to this chart, towards the end of the session. So DXY, one of the biggest things we've been watching for quite some time. We mentioned that on the daily side, it has not confirmed to break support yet. It is currently testing previous support as resistance, which is the 103.4, 103.5 level. If we zoom into the 4 hour, we can see it has confirmed, but it is trying to work its way back up higher. So we'll have to see if it accepts back in 103.5 is really the core level here. If it can get above that, then you're probably going to see equities and Bitcoin or crypto as a whole probably come off of their highs. And if it gets rejected here, you'll probably see crypto and equities break above recent highs. So very much something to consider there, but we do not have confirmation yet. If we close beneath 104, 103.5 today, then we will likely have confirmation and we'll end up heading lower into CPI. But of course, we only have 2 days of trading left until CPI, which will certainly have an impact on the dollar. Of course, if CPI comes in lower than expected, the dollar is definitely heading lower. But if CPI comes in higher than expected, the dollar is heading higher. And we know the inverse relationship between the dollar and risk. So looking at equities, I'm going to zoom out to the 1 hour here. So very much what we discussed yesterday is breaking above, the range, very important. But, throughout the day yesterday, and we talked about, resistance of 39.50 for equities, it actually got sent right back down into the range. And the interesting thing about this area of the range, and I'm just going to zoom out to the 4 hour to get a bit better of a picture, is really the official range for where it was trading was 38.75 to 3800. We had deviation multiple times above and below. And now, we're kind of, while this is technically, the lower half of the broader range, we're in an area where you're trading above, where the deviations were and, at a point of contention previously in mid-December. So if you can confirm back above 3,900, then equities have a really good path potentially to make a higher high and head towards 39.80, 4K for potentially, another decision zone to either head lower or head higher. So moral of the story here is for equities, 3,900, very important number for, S&P 500, I should say. And if you can close above 3,900 and confirm above that, then you have, a lot of room up to 4K. Alternatively, if you close below 3,900 and confirm in that box, you're likely, ranging at least in here, or you're breaking lower if you get beneath 38.75, which you can see is support for where we traded yesterday. So we tagged 38.75 to perfection, had a bit of a swing failure pattern under it, headed higher. Now we could have another swing failure pattern lower to follow this pattern, or we break above it and head higher. So something to consider for equities. And right now, I will say we do look more positive than I expected. I told the trade the chain community, I was expecting probably another tag of at least resistance and then ranging for equities and probably for Bitcoin as well. I still think that is probably more likely than not, at least on the first attempt, but we do recognize that 3,900 is the resistance level. So if we do get acceptance above, fantastic long here. And then if we end up staying below, which another hourly candle below confirming would probably send us back to 38.75. So looking at Ethereum or looking at Bitcoin, as we can see, while we were talking on the Bitcoin, the Binance Bitcoin spot chart got just above 17.4, but still stopped out at this resistance level. So very much what we discussed in the beginning about 17.4K being that key level. If we zoom out a little bit just to get a bit better of where we sit in the broader range, we discussed this yesterday. Bitcoin has this high from mid-December, but Ethereum's actually already at that high. So very interesting difference between Bitcoin and Ethereum. But Bitcoin does, very much look strong here, even though it is oversold. We are above this liquidity level. We pretty much have, clean sledding all the way up to 18K if 17.4K can get flipped into supports. We, of course, could deviate up, maybe tag 7.5 and then deviate back lower into the range. It's certainly possible. And that's why we look for confirmation above 17.4K before, really starting to bet significant amounts of capital on that type of move. So what we know right now, 17.4K, if it gets rejected, if we get a confirmation back down, we're probably going to at least come to 17.2, maybe a dip down to, mid 17.1K. And if you get above 17.4K, then you can flip that and head higher. And I would say that there's, the only real resistance that I'm seeing between that level and 18K is probably this level at 17.6. So, which is just kind of the lower end of where it trades. See how it caught supports, kind of traded up, caught it again before dipping lower. So 17.6 would probably be the first level of resistance if we didn't slice right through. And then, of course, if 17.6 can get confirmed, then 17.8 is looking likely. So let's just go ahead and zoom in really quickly as well. Starting to break above, of course, nothing confirmed, but, it is looking stronger. We've got a nice little buy candle coming in here. If we can get volume coming, we can get buy volume coming in to, I'd say, at least match that previous candle or the current candle, you'll probably end up continuing higher. Looking at Ethereum, knowing what we do about Bitcoin, obviously some momentum and strength coming in. This is Bitcoin's high that we mentioned, zooming up to 18K, 18.5K, but Ethereum is pretty much already here. So if Ethereum can get above 1350, then it's got, solid room to slice all the way up to 1430. And a very important thing about Ethereum here is this fair value grab. And I kind of mentioned this yesterday, but I'm going to go over it again today. If you can get above 1350, you basically have a massive trading gap where we just sliced immediately through 1430 and then ended up, finding resistance at that 1340, 1350 level, after we traded down. So this fair value grab area is typically what you'll see is if it gets confirmed into that area, it will just slice right through and kind of quote unquote grab those prices and head and hit the highs up to resistance. So 1345, 1350, 1345, 1350, a very critical level for ETH. If you can get above, you've got a very potentially, lucrative trade right there, 6% trade from the highs all the way up to that next resistance level. So very much something to consider. And then alternatively, if this momentum dies, if we cannot get above 1350, at minimum, you're probably getting sent back down to 1305, which is the lower end of the range. And of course, if 1305 gets cut, then you're back down to 1280. But this momentum does look strong. Let's move back to Bitcoin. So we can see mostly perp led, but definitely some spot interest. We had a lot of spot selling from the highs yesterday. Not a whole lot picking up into this move, which is very concerning if you think that 17.4K is going to break out. as much as I do like this momentum right now, it does seem that, the perps are way outpacing spot purchases. And the only thing that's really going to save us right now is if spot ends up trying to catch up to that. But typically what you'll see is perps end up selling off. And we talked about this yesterday, and we did get that sell off. Because whenever spot starts to sell off pretty solidly, that's when we start to get those confirmation of tops. And that's kind of what happened here. You had spot, we had spot leading or even, and then spot started selling off greatly, but we held key support level. So, in a perfect world, what we want to see is spot start to creep back up to catch up with perps. Else perps may end up just selling off and continuing consolidation, maybe around 17.3. So just to kind of visualize that, we are above the area that we want to be. But if spot does not come in, then we'll end up deviating and heading back down, like we discussed before. So something to consider. Like I mentioned before, that buy volume definitely coming in. We're already even with that previous candle. So definitely there's a positive note on the amount of volume coming in. Of course, perps, a perp rally can be had. It's not unheard of. It's just typically a signal when you see perps outpacing spot to this type of degree. There's some sort of game that's being played, and typically it's your money that ends up in the game. So that's why we wait for confirmation of these levels before longing into higher levels, because you could certainly just get clipped here, get deviated back into the range, very similarly to basically what we saw with equities is, and then it ends up getting piped back lower. So that's why even with this boost, you would look for that confirmation, you would get the price boost, and you would have made a % trade on that equities confirmation, but it ended up careening back down and not holding. So if you kept your stop flat, you would have made no money, but you also would not have lost any money because you intelligently recognized that area would be important for future trading. And then we caught again here, which would have been a good long, and now we're headed higher. Momentum does seem to be carrying us higher. So of course, my perp warning is certainly a grain of salt type warning, but personally, before betting large amounts of money, I would like to see spot pick up a little bit in line with perps so that I feel that I'm not getting taken advantage of. But alternatively, if this does zoom up, I'll wait for that clip, I'll wait for that catch, at 17.4 again, and then you have a really good long signal. So again, CPI on Thursday. This was in the Trade the Chain newsletter. So if you don't read the Trade the Chain newsletter, make sure you get signed up. You can get signed up for free on the Trade the Chain site. We covered basically our expectations for CPI, discussed that a little bit earlier this morning as well. But this is going to be the next milestone. So typically, when expectations are positive for this type of number, you'll see a front run into the news. So, be very careful if we continue to rise into Thursday. Typically at that point, you will see a reversal. Maybe the data is not as good as we really expected, which is always possible. So just be prepared for the psychological games that are going to come near resistance, near the reporting of a extremely key economic data point. And of course, what's going on with spot and perps, because spot is what's going to continue the rally and perps are what's going to cause, intermittent volatility and pain for those trading in the realm. So we're above 17.4. Personally, I would like to see a confirmation at 17.4 or maybe 17.390 for a confirmed trade. And then for Ethereum, I would like to see a confirmation above 13.45 for a long higher. Else we'll continue to range into tomorrow and potentially Thursday. So good luck, happy trading. And of course, if you're not in the Trade the Chain community, make sure you get signed up at tradethechain.com. There is a 14-day risk-free trial for you to get in and get involved and test everything that we have out. So good luck, happy trading. Speak to you soon.